And so it must be, there must be a big life decision in the middle of this. I'd love to unpack that and see.
I think as a startup founder, you thrive on big life decisions. It's what keeps you, excited and gives you adrenaline. So I think people always think like, oh, isn't it scary having to pay staff, or isn't it scary having to raise money? It's like, actually, it's just part of your DNA.
How would you kind of like describe the difference in architecture, and how have you thought about it, from the software side?
Yeah, it's very, very difficult to find analogies. For me, it's almost like an old school FM radio versus like a streaming TV service or Netflix.
What specifically, what in this business model you liked, and what would you have changed if the robotics industry was maybe 5 or 6 or 10 years ahead?
We focused heavily on scale of revenue based on number of robots. We thought a good proxy for value was going to be the actual robot.
Hey everyone, and welcome to BitBuilders, where we sit down with the greatest minds building and exploring robotics in construction and space. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology, and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Hi, David. Great to see you again. Huh?
Yeah, good to see you.
So just for the benefit of those listening to BitBuilders, do you want to introduce yourself? Do you want me to do it?
Sure. I'm happy to do it. So my name's David Ings. I'm actually based in New Zealand. I am the head of robotics for DroneDeploy.
And can you give us like a 2-second blurb of what DroneDeploy is?
DroneDeploy is one of the world's leading reality capture platforms, and it's used by companies like construction companies and energy companies to track progress of construction and digitize their physical environments.
Gotcha. And we've had a great conversation last time. I think I really understood that we can draw a lot of insights speaking with you. I think the goal of BitBuilders is to aggregate knowledge for people that are listening, maybe founders or people from, for companies, or simply audience that are interested in construction robotics, and to make a knowledge pool around what it takes to make, scale, deploy robotic solutions and adjacent solutions in the traditional industries with a specific focus on construction. That's what we would love to give back to our audience. And so I think a lot of it starts with your story and what's happened to you before joining DroneDeploy. So I'd love to take you back, take me back in time and kind of like understand where your passion and motivations in your early careers came from and what led you to your job. So for example, before founding Rokos, which was later acquired by DroneDeploy, but we'll get there. What was keeping you up at night? What was getting you motivated? What was your dream job back then and what it is right now?
Yeah, no, great. I love building things. I love creation of new things. So they always talk about the concept of 0 to 1. That's my absolute favorite part of doing startups. I come from a software architecture, software engineering background. Historically, mostly in cloud technology, actually building really large-scale cloud systems. Prior to founding Rokos, which was the robotics company, I was involved in a marketing tech company where we grew one of the world's largest loyalty programs with hundreds of millions of users connected to cloud infrastructure and over 50 countries actually running that infrastructure. So really, really big cloud programs. And so my passion really was doing startups in technology, and often it was really looking at nascent markets. So it was basically trying to say over the next 5 or 10 years, what is the technology that's going to be transformative? What are the bits of technology that are going to come together that's going to create a commercial opportunity? And It really is creating something that will be financially successful. And with that marketing tech firm, I'd been there for about 7 years. We listed that on the stock market, and I was looking for what next. And I think it was pretty obvious. This is probably 2017. It was pretty obvious that robotics was becoming more mature from an R&D perspective. A lot of universities were outputting capable robots, and I kind of tell the stories like, a university would be saying, hey, we've got this gripper that can pick a strawberry, or, we have a tractor that can drive around in the field on its own. But what the robotics industry did not have is an understanding of operationalization. How do you sell those robots, and how do humans interface and tell those robots what to do? How do they monitor those robots? How do they securely connect to those robots? So there was a whole wave of operationalization that I believe would need to come after you had the hardware and software problems solved. And I thought coming from that kind of large cloud background was a very valuable component. Also have a co-founder that I've built businesses with in the past. And so the two of us really looked at the industry and said, hey, we believe there's going to be lots of form factors of robots. Inevitably, we think the robots are going to be prolific. There's going to be lots of them in many different industries. But the fundamental is those types of technologists don't understand cloud. They don't know how to scale and operationalize this type of technology. And that's the contribution we can make, not necessarily inventing the robot or inventing a sensor or doing better navigation on the robot. So we founded on that principle that we would create the cloud infrastructure for robotics companies to actually go ahead and do this. And I think, a lot of the early VCs were questioning, well, wouldn't AWS or Microsoft or Google provide cloud infrastructure for robots? But it was very obvious to us, being very close to the IoT industry as well, that the big cloud providers thought robots were just IoT devices, whereas the IoT technology was actually built for millions of devices doing very little data transfer. It's a fridge. I have a temperature, and I'm sending you little bits of temperature data, every minute. And there's millions of fridges, whereas robots is actually relatively less robots. But the amount of data that comes off these robots is humongous. And so you need really low latency internet connectivity. You need very secure internet connectivity so nobody hacks your robot and takes it over in your physical environment that the robot's in. And you need to be able to shape the data coming off the robot in a whole different way. And this is before a lot of the gRPC, WebRTC types of technologies were there. A lot of it was WebSockets and that type of thing. So we felt there was really a massive gap that cloud companies were not servicing. And also the fact that any roboticist, given a white paper on how to code up an IoT infrastructure, it's not user friendly for that type of user. So you needed something that played nicely with robots, had all those different characteristics around huge amounts of data, shaping data, connecting, these devices, and then helping people connect, monitor, and control. And we actually worked with the hardware team of Microsoft to build the security architecture for the company to make sure that, we actually worked with the team that works with Xbox, because Xbox is one of the most, attempted to be hacked pieces of hardware in the world. And, with Xbox One, they said, it got hacked in the first day. With Xbox 2, it took a little bit longer. And then as the generations came on, they managed to actually build like really secure infrastructure to defend off teenagers with unlimited time trying to break into that kind of system. So that was really the evolution of creating a company that was focused on helping robotics companies scale their fleets and helping organizations tell robots what they want them to do, and actually then monitor the robot and make sure the robot's doing it. So that was really the kind of advent of the company and the concept and my background.
Amazing, and I think what echoes in this answer is the operate robots and the build robots are two completely different tasks, and I think we've touched upon it in our first conversation. I think I want to pick that up later on, but actually I want to ask you, for the benefit of the audience, what do you think is fundamentally different when operating an IoT fleet? Because we're seeing a lot of warehouse management solutions coming online, and we're seeing a lot of robotic solution in swarms or rather they want to be operating as worms coming online. And so you have two different technologies, two different approaches. And one of them is basically sensors. There's relaying back data at a certain, rate, and potentially, coupled with actuators that do something. And then on the other side, you have robots. They have the same building blocks, but they work differently. How would you kind of like describe the difference in architecture, and how have you thought about it, from the software side?
Yeah, it's very, very difficult to find analogies. For me, it's almost like an old school FM radio versus like a streaming TV service or Netflix. It's like it looks similar from the outset, but once you actually dive into it, it's like infinitely more complex. A robot can either be seen as like 1,000 IoT sensors like strapped together. That's the one way of thinking about it. Or you can actually see that a robot is actually like a mobile server. It has onboard compute. It's doing machine learning, calculations. And so you're basically managing a server, but the server's moving, and you need to know the concepts of location. So with IoT, generally, you're not changing the information you want off of it all the time. You're basically taking your fridge sensor, saying, I want temperature, humidity, once a second, and it's very rare that I'm going to go tell all of them I'll make it twice a second. Whereas with a robot, when you want to intervene with the robot, for example, you want video feeds. So suddenly you want to connect to a high definition video stream because an operator needs to operate it. And video is a great example where you actually have two channels for video sometimes. There's the concept of multicasting. So is there a whole bunch of people that want to see what the robot's doing right now? And that introduces latency. Or is it, hey, I'm the operator of the robot and I want the lowest possible latency so I can control it live? So you actually need two video rails. Whereas with a fridge sensor, there's no video, and video turns out to be hard again with robots, just like everything in robotics turns out to be quite hard. So when you connect to the robot, you're changing the shape of the data you want off it based on the person that wants the information. And then there's more typical situations like, hey, I want to record battery life. But if you look at the sensor on the robot, it might have 100 times a second telemetry on its voltage on its battery. But all the operator wants is maybe once a second or once every 10 seconds just to get a quick update on, hey, just what's the estimate on percentage health? So you need a way to quickly shape the data to say, hey, take the voltage, work out a rough percentage, and then send us that on a slower frequency. But then if you need diagnostics because you're getting voltage issues and you suspect your battery's giving you problems, then you want to up that frequency and record it. So instead of streaming it to a user, you want to dump all that data to the disk. And then when the robot is online, slowly, drip feed that very large amount of data through to the cloud. So that concept of controlling telemetry information in different formats, audio, video, is much more intensive. And it's a combination of media, the combination of diagnosing servers, and then kind of the base concepts of IoT as well, kind of mixed in. And what you're trying to do is actually make it consumable by roboticists. So you're basically trying to provide it in an architecture in a way that they think, because they have a different format that cloud architecture can be quite different to the way that the robot's architecture works. So you want them to be able to plug it into their robot safely, tune it, and then get the information out that they want. I think the elevation of that, though, that's at a very raw level. Those are the kind of foundational building blocks. Ultimately, if your robot's working, you actually don't even want to connect to it. You're just hoping that it's actually working and doing its job. So really there's, on top of those layers, you have concepts of like mission management. It's, hey, robot, here's a job for you. And that job could be quite sophisticated. It could be linear, like a vacuum cleaner. Here's a room, go and clean it. Let me know when you're done. Or it could be like in construction, go to this room, turn on this camera, walk around, turn the camera off, upload that video to this server. Now go to the other room. But also there might be some logic in there. It says if you're running out of battery, make sure you can make it home alive, charge, keep going. So the missions become very complex business management systems. And then on top of that, obviously, is the interfaces. How do you let people tell the robot the task they want performed? And, a robot vacuum cleaner is, show me a floor plan of my house. I can draw some rooms and I can click on one and say, just go clean that. So you're trying to simplify that at absolute top level. But under the hood, there's a hell of a lot of, software architecture going on to get that all to work.
No, that's absolutely clear. And it doesn't come across as, as soon as you see a robot, right? You're looking at it like, oh, here's a completely new and very difficult mechanical problem that this team has built. But people maybe, at first glance, don't realize that the data flow to and from the robot is actually a true bottleneck for the robot operation that you need to solve upstream. And then, so what you guys were doing at Rocos was developing a developer tool, you could call it, for roboticists. And I'll honestly be very happy. It might be, professional deformation, how they call it. But I'd love to, hear if you had to pitch Rocos again for one last time, how would you pitch it? And also, I'd love to throw in there, what are the 2 or 3 lessons that you distilled from that experience? Because it might have been, must have been huge because you worked, years on it. I believe you were 5 or 6 years.
Totally. Yeah, I mean, the pitch firstly was we weren't going to convince venture capital firms that robots were going to be a thing. We had to find VCs that believed robots were coming. So when we start off, we'd share our vision to say, we believe in a world where there are robots everywhere you look. If you're driving down the motorway, you're going to see them in the fields. When you get home, they're going to be vacuuming your house, mowing your lawn. When you go to work, you're going to see these robots delivering things on the street. So you're having all these use cases where there's robots. And I think the types of venture capitalists that invest in that type of technology say, yes, we believe that. The next question is, what is the tooling? So we're not the roboticists. We don't have the PhDs creating the gripper for the strawberry. So we're saying you've got the MIT graduates coming out with these unique inventions, but what are the picks and shovels of the industry? What are the tools and the utilities that this industry is going to need to scale robots in the real world? And I think, again, that story resonates with investors saying, yes, there'll be robots. We know there'll be lots of smart people. You're not trying to convince us you're the one solving some unique robot problem, but you are saying that you have a lot of experience operationalizing technology, and you can understand and bridge this world between security, cloud infrastructure, and robotics, but you understand how enterprises are potentially going to be consuming this technology. So we really had 2 markets we spoke about. The one, as you said, was developer tools for roboticists. I'm a roboticist. I know nothing about cloud tech. And if I try, I'm probably going to fail. Plus, I'm going to use IoT, which is the wrong architecture. So we built unique architecture, and we had the credibility and credentials to do that. But on top of that, we said you're going to have enterprises wanting to control their own fleets of robots and do what we call heterogeneous fleets. So you have an oil and gas company that wants to do inspection. They're going to need an EX-ATEX certified robot that can go into hazardous, gas environments and take photos. You're also going to have a drone that lives in a dock outside. You're going to have a different form factor robot that's doing things inside. And as an enterprise, the way that you structure your missions and the work you want the robots to do, you don't want to have lock-in vendor lock-in. So today, if you're using a robot for inspection, you want the same information you've given our software, the physical 3D environment, where you want the robot to inspect, what pictures you want it to take. You want that to be transportable. That's part of your IP. And so if, you need the system in the middle that can talk to any robot, that can actually reconstruct that mission, that work of that robot into that environment, so that the actual enterprises don't have vendor login. Plus, they simplify to only have one tool to manage all of their robot fleet. So that was a premise that, again, we had very, very early on. And we weren't quite sure which one was going to win at the end of the day. Was it going to be the robotic, what we call robot as a service companies that needed infrastructure for robots? And the conflict for that is, how long until AWS and Microsoft and Google get around to building things like this? Or do they acquire us as part of that because they need it eventually, for this type of infrastructure? And then on the enterprise side, the questions were, well, would they just use the vendor-specific systems? Would they try to build their own? And so there's all these there's these multiple opportunities. You asked me what I learned. Firstly, we were very early in the industry, and it was very clear because we raised money on pitch deck. We didn't build any technology. We didn't have prototypes. And the classic question was, hey, can you show us what's the total addressable market for robotics? We had no idea. We could not put, I refused in the first round of investment. I said, I refuse to have an exponential chart showing you the growth of robotics because it's complete bullshit. So let's have a conversation of, do you believe it's coming? Is it going to be big enough? The only question really was, what's the time horizon? And are we global experts in this industry that we can actually solve this problem? So the interesting thing is the acquisition from DroneDeploy came quite early in our generation. We were 4 years in, and DroneDeploy was very interested in knowing that we had all of those tools underneath the surface of the water, but they were very interested in the enterprise component. Is how do we have a platform that enterprises use to task robots with sensors to go and digitize physical environments. So what won eventually for us was that enterprise side, but obviously all of the tooling was incredibly valuable to actually get there. So what we realized, I think, as everyone does when you're raising capital, is no VC is the same. They have very specific types of profiles. Do they want to see $1 million in revenue before they talk to you, or they're happy to look at a pitch deck? We were mature founders, and that counts for you in some cases. You have a track record, you've got expertise, you know how to run companies. So for them, the risk profile is very low on can you hire a team and actually build something? It's like, yes, you can do that. Can you be world unique at this niche of cloud infrastructure and technology? Yes, you can. The hard bit was really, what was their projection on, are they betting on robotics as a category? And, do they believe our type of tooling was a possibility? And the question wasn't, were we too late? The question was, were we too early? That was always the hardest thing for investors.
Which is very interesting given the timelines, right? If you have to chart what happened between, the founding of Rocos, you were spot on in terms of timing. You were there for the infrastructure. Looking back, you were there for the infrastructure wave of robotics. And I think, around the same time, I think also like other hardware platforms like Arduino and Raspberry Pi were already taking over the consumer market. So outside of that enterprise offering that in the end won you the acquisition, but some of these platforms were taking over the market of, kids that were tinkering or students that were tinkering in labs. So I think at the same time you were having like a wave of incredible robotics coming together. And then it was, obviously Boston Dynamics making headlines with, amazing feats of the robots. But then if you had to chart what was happening at, in the upstream level of designing and trying to, figure out where do we go with robotics, democratization was a big thing. And then connectivity was the other thing. And I think these two came together quite nicely, for Rocos, but then for a lot of other robotics companies. But you said something really interesting, around pitching and trying to show an addressable market that doesn't exist yet. And I think what we look at when we are looking at founders, so we end up looking at founders either in the earliest stages of them founding a company, they maybe have incorporated a company or may have not. And then we also look at founders that are simply walking the idea maze of what company should I build? And so when they're looking at these, all the options that are, before them, you see a lot of the times that they tend to hyper specialize and to find one problem. Above all, if they come from academia, they tend to hyper specialize and follow one single problem, which, every investor will tell you is a good thing. It's a bad thing. What we think it's really interesting, above all for robotics in construction, is when you're able to set yourself up for cross-selling across, in your customer base, but you start from a wedge. And you start from a small problem that is a hair on fire problem for, let's call them, the general contractors or the trade subcontractors of this world. And then once you take, and it could be also the developers, why not? And then once you take that problem and you solve it and you're wedged into all of these companies, now if you have a software platform, for example, or a modular architecture for your hardware platform, you can solve several new problems and you can cross-sell. The ACV is never enough at the beginning. The total addressable market is never enough at the beginning because we haven't solved humanoid robots or, or kind of like multiple form factor robots, modular and soft robotics. We are studying them, but we're not there yet. So that's what we see most often. I don't know if that, that sounds, that sounds familiar.
Oh, absolutely. And I think those early investors with companies like us, they realize we're inevitably going to be doing some pivoting during the process. But by raising money to assemble a smart team that basically immediately connects to the absolute leading edge on robotics and the leading kind of early adopter technologists in the enterprise, if you can learn faster, you become years ahead of everyone else that thinks of it 3 years later. So as long as you're not burning unbelievable amounts of cash to go through that evolution as a company, and then again, having more mature founders means you're very comfortable being in a space where you're learning as you go and you're creating your company vision as a much more defined vision as that kind of coagulates and comes together. So it's different from, as you say, where you spot a gap, it's 100% clear, you raise as much as you can, you just go as hard and fast as you can to solve that one problem. We were more like, hey, this is growing into a big industry. We need to be in the industry to actually figure out what the problems are to solve. So we started solving those piece by piece. And I think for us, what we found year on year is actually what we term like leveling up, kind of like in a game. It's like, hey, now you build the little bits of telemetry. Now you build your video thing. Now you've got teleoperation for robots. Now you've got a mission system. Oh, now you've got an enterprise management system for heterogeneous fleets. And so you keep leveling up as you go. And without the bottom layers, you can't build that top stuff. So, and Google and AWS don't have that bottom stuff. So you really have to have built that. So you become years ahead of the competitors around that. I think the interesting thing, you're saying as well is, the one interesting thing in terms of maturity is DroneDeploy were an absolute believer in our vision for particularly ground robots, because they'd seen this almost a 10-year shadow in the drone industry where, the first drones were human piloted and had to be balanced. And then obviously chipsets came which could balance the drone. That was the MIT students that could fix the problem of how do you balance a drone. And eventually you could, yeah, exactly. Right. So then what happens is it's not an industry yet. Then what happens is you can buy a drone for say $200,000. And it's kind of fragile. We literally have some in our office, which are massive and evil. Like we basically will never let anyone switch them on because they're bad. But of course, then you prove the use cases. You can do surveying and mapping and all of these amazing things with this drone. And I'd say kind of in the early 2000, we were out with Boston Dynamics. We got one of the first, spot robots for R&D. And that was kind of that expensive early stage robot that, got lost and it had issues and all the rest, but it was that promise of what's to come. And with that, you could figure out what those use cases were going to be. And then that robot got way more capable year on year on year. And now you have this next wave of much lower cost robots that aren't nearly as capable yet, but, they're capable enough for some stuff. So the question is really, and we just see we're not quite there yet in terms of low cost, totally capable, off the shelf robots on the ground. And that day is coming very, very, very soon. And that happened with the drones. DJI, once they hit that price point of $2,000-$3,000, where the drone was reliable enough, the camera was good enough, the control system worked, networking worked, man, you just had this explosion in the industry. So we still say we're waiting for that explosion. Like the expensive robots now work off the shelf. They can do a lot of amazing things really well. The lower cost, under $100,000 robots are really struggling still with their software stacks mostly and, those kinds of things.
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
And I guess a lot of it has to do with the miniaturization of intelligence when it comes to the computers that you have to put onto these robots. You need to have them cheap, and also the components that need to be reliable enough. So when you're buying consumer robots, let's call them, if you're not paying $1,000 for them, you're probably not getting the generation of 2024 of compute and components. You're probably getting the 2018 version that used to be cutting edge, and now 6 years later it's actually just under $1,000 because these are components, and I'm just integrating in something that could go viral on Amazon and be sold on Amazon. And I think I saw this amazing quadcopters with obviously ultrasound sensors around them. They don't hit things. They actually follow you. They can lock you and then follow you. And these are like $250, $300 drones.
It's crazy.
And this is just amazing. I think it's just amazing. Yet it's funny because it's less obvious of a curve than smartphones, for example. So it's not so clear every year that you go ahead that retail robots are getting better. But because they're not doing so many more things, or they're not taking better pictures, and they're not taking, they don't have 10x the battery life. That's not what's happening. But those low improvements in cost, actually, if you look at the price tag of a given robot with a given performance, if you try to standardize, it's really hard. But if you do, then you index that and you try to chart it through time, robot costs are going down really, really fast. And then automation costs, we're seeing that they are going down, but they tend to level up. They tend to reach an asymptote when you're in a warehouse. You need fully reliable automation with human in the loop and human in the environment, meaning you should not hit and kill someone with your robotic arm, hopefully. And that level of technology is there, and it's being used every day by many. It used to be only Amazon, and now many others are doing fulfillment of even just their large e-commerce with it. But that level of the capex needed, it's basically there's an asymptote that is reaching, and so we're seeing a lot of companies trying to break that floor and try to go down. And they most often try to do that with novel software because the hardware is there to a very good extent. And I wanted to ask you, go back, and I wanted to go back and try to think about the economics of what you guys were selling and in general, trying to understand what was your business model at Rocos, what specifically, what in this business model you liked, and what would you have changed if the robotics industry was maybe 5 or 6 or 10 years ahead? Because that's always interesting.
Yeah, I think we had an unfair advantage coming out of cloud and software that we already had kind of software as a service models in our mind. So it was all about annual recurring revenue. It was not about one-off licenses and things like that. So, and I think again that's skewed by the fact that as soon as you talk to VC, it's like, well, how are you going to make recurring revenue? So that was just kind of baked into the company, step one. We focused heavily on scale of revenue based on number of robots. So we basically said so if we have our customers being either robotics companies trying to scale selling their robots as a service, or we have enterprises trying to scale using robotics, we thought a good proxy for value was going to be the actual robot. So our pricing was very much related to when you add another robot, it adds another incremental fee. In cloud engineering, often it's to do with number of megabytes or, compute units and things like that. And we really weren't interested in being in that massive scale game where, it was this unknown number for robotics companies. It's like, well, how much is IoT from AWS? It's like, well, how many devices have you got? How much data are you sending? How much are you storing? And how much compute? And they're like, what? I just want to know how much it's going to cost. So we simplified it to say, hey, if you have a robot, it's this much per month or this much per year per robot and scale. I don't think that was wrong. That was a good proxy. I think the only downside is on the enterprise side, it takes enterprises a lot longer than people think to get more than one robot. So you go like, yeah, we've just sold the company one robot. Next year, it's going to be 10. And then you get to year 2 and they're like, oh, but we've just finished testing in the lab. Now we're going to put that one robot in the field. And like, oh, so it's still one robot? And they're like, yeah. And then you're like, you prove it works in the field. And then you're like, great, so we're going to scale to 10. And they're like, oh, no, maybe 2 by the end of the year. So you get 3 years in and you're up to 2 robots. So that kind of thing becomes like, wow, this is actually going to take a long time. I think that'll change as the hardware, software, everything becomes much more simple. But that's a challenge. So you have to kind of work with enterprises and the fact that you can't just charge them for that one robot. It's like, hey, we're going to come in as world experts to help you set up your robotics program. We're going to set up your lab, what testing infrastructure needs to look like. And you're probably going to buy one of a few different types of robots to test them. And on the robotics side too, again, it's taken years for these robotics as a service providers. We've got customers now with hundreds of robots in their fleet, but it's not thousands, it's not millions. It's, hundreds is awesome. Hundreds is you're high-fiving each other that you've got a pretty amazing, company.
Yeah.
And it's interesting because I think people are looking at the humanoid robotics company, and there's no humanoid robotics company in their pitch deck where hundreds is a good thing. Like, they're talking hundreds of millions. They're raising billions of dollars so that they can produce hundreds of millions of humanoid robots on a trajectory. And I think all of that's real. The question is just, what's the timeline to get there? And is the generation of robots actually significantly simpler now to build a robotics company than it was even 5 years ago? And a great example is, I was at the NVIDIA conference this year in San Jose, and you had, Disney and their robotics team that can produce a robot in 12 months from scratch. You have humanoid robotics companies that within 12 to 18 months, they have a seemingly system that's seemingly close to Boston Dynamics' humanoid that's been at it for 30 years. It's incredible the amount of technology and available to engineers to produce this next wave of robotics. So we think that robot scale was still suitable, but I do think inevitably that type of infrastructure stuff is actually going to be a race to the bottom. I think inevitably the cloud providers will start providing more and more rails for these robotics companies to use. And the really big robotics companies, and we did find this in the early days, so we spoke to like autonomous driving companies and things like that. They're building their own stack. They want to own everything in that stack, and they're happy to hire 50 engineers to do it. So they will be building a very raw components from the cloud providers. So I think the DroneDeploy acquisition skewed us much more to enterprise. There's much higher value working with enterprise and solving enterprise problems rather than selling, little bits of solutions to the robotics teams, because you only land up really with the small to medium robotics companies using that type of system. The big ones, build most of the infrastructure themselves, and then some of it they'll outsource to, various software systems that are used.
Yeah, I mean, vertical integration for these companies is key because you don't want to be stuck in a place where someone else, you're already doing a deep tech type of innovation when you're, looking ahead, and it's really, really hard to get out of that, negative cash flow mode. And you don't want that to be a further risk to have a company that's, supplying you something eat into your margin more than it's simply just absolutely needed. Well, of course, you're going to have to,
Yeah, and that's a really good question around margin. So the one is a tactic around, what if something happens to that company, then my company's in trouble. And then the other tactic, as you said, is, well, they're just eating my margin. So what could happen is companies then use your infrastructure to start with just to help accelerate and get their business going, but then they're picking away and getting rid of the vendors, slowly creating that technology themselves. There's all those tactics which are very difficult. And I think there's some really amazing, niche providers now in the robotic space, companies like Foxglove, which provide this really specific band around data management for robots. And technically that thing is not mission critical. So it's not stopping your robot from working, but it's incredibly valuable for developers to diagnose their robots. They don't really want to build that kind of developer tooling for themselves. That's non-strategic. So I think that kind of non-strategic component is excellent. And I think that's where Datadogs and all of those other, New Relics, that's where all of that infrastructure stuff came out of. It's not, you don't rely on it, to run your system, but you rely on it to help you scale and monitor and manage, your systems.
And that's also, and I love how that idea has stuck with you over the years. So like Rocos was an infrastructure company for robotics, and then DroneDeploy is selling services that can, be overarching in your business, business intelligence. It could be that you're doing inspection, it could be you're doing mapping. And I'd be very curious to understand, how did that acquisition go, and how did that also, just as an experience, as a founder, and then how did that translate into you shifting mission? So it's really strange for me sometimes to see. It's strange because I haven't, felt it myself, but it's really strange for me sometimes to see founders that are, stepping away from their baby, they're selling out their baby, and then, they're working for the buyer of their baby, and buying into their vision, and truly, taking that as the next challenge for their lives. And so it must be, there must be a big life decision in the middle of this. And I'd love to unpack that and see.
I think as a startup founder, there's you thrive on big life decisions. It's what keeps you, excited and gives you adrenaline. So I think people always think like, oh, isn't it scary having to pay staff, or isn't it scary having to raise money? It's like, actually, it's just part of your DNA. Like, you just inevitably have to do that. It's just, it's not scary, but as you're right, it's a big confronting moments. The introduction happened, and again, this is another bit of advice, you mentioned earlier around VCs. The thing is, talk to lots of VCs. Startups should talk to as many VCs as they can get their hands on, because VCs see the patterns in the industry. They do this for a living. They talk to people like you for a living. They have deep research into your industry that you're trying to get into. They can give you really flipping great advice, and they can introduce you to really interesting people. So a lot of the kind of fortuitous moments we had with, luckily when you bumped into that person that were introduced, it was actually VCs that had brokered those introductions, even VCs that didn't invest in us. And they were like, hey, we know these companies. So this one was Airtree out of Australia. We were talking to about some of our first rounds, and they said, hey, you need to talk to the team at DroneDeploy. In America, we were going over to Silicon Valley to go visit some VCs over there, and so we just literally had a catch up with Jono at DroneDeploy, one of the founders there, and that relationship had started, and we at no point in time at that point did we think they'd land up being an acquirer. It was not an obvious thing at all. They were a company that did reality capture with drones, but they were a fantastic scale up in terms of seeing the scale that that organization had gotten to. And what happened was we then hit COVID. Now, everyone says, oh, what's it like starting a company from a place like New Zealand? Are there nice advantages? And it's like, no, there's, very few advantages being so far away from people that are buying robots and scaling robots. There's many lifestyle advantages, and there are great R&D schemes, and there's really smart people, but you're not next to your market. So if somebody's in San Francisco, they can jump in a car and go visit a construction company and test their robot on that American construction company. Whereas from New Zealand, it's a flight and logistics and import and all sorts of nonsense. So what happened was COVID hit during our startup phase. And suddenly it was our competitors couldn't just jump on planes or jump in their car and go visit their customers. And so it kind of leveled the playing field for us for a little while, which was absolutely amazing. So it was just the time zone differences around the world that we had to then compensate for. But they couldn't visit us. We couldn't visit them. None of our competitors could do it, which was super interesting. So, and during that path, DroneDeploy got kind of interested. Some of their customers got like spot robots, and they were interested in, hey, could we actually automate reality capture? Taking a 360 camera, the zoom camera, and automate this robot walking around the construction site, actually capturing what humans do. So we basically got some of our engineers together with, again, Jono that we had met. This is all remote. Got some R&D spun up. And over the course of a few months, it started to becoming more and more interesting that, hey, there's a really interesting market here. And there was that question really around, hey, do we actually do a deep partnership? But then you also have those problems as a startup is, do you skew a lot of your technology just to one vendor, being DroneDeploy? And then you get, what if DroneDeploy eventually goes and uses somebody else, and all of those pains. And it was just the classic case of the CEO flicked me a note from DroneDeploy Mike and just said, hey, Dave, it'll be great to have a catch up. At that point, there were bells going off in my head of, hey, this could be that kind of conversation. So, are we up for it? And in that conversation, you literally said, have you guys thought about being acquired? Now, we were literally doing a capital raise at that moment. So for us, in some ways, it was convenient because we could literally say, look, if we're going to do this, let's not talk for the next 12 months. It's like, look, we've got weeks to make this decision, not months to make this decision. And so DroneDeploy was amazing in that process. We went into, now the interesting thing, we went into due diligence with them. They actually put a convertible note together to say, hey, look, let's assume this goes well. So we'll support you guys so you don't have to raise that money now. And we'll go through due diligence, got through due diligence, investment done. And this is all during COVID. None of us except Jono had met years ago. So it was all over video calls and all the rest of it. So that in itself is very weird, because
Wow.
all other investments I've been involved with, the first thing you do if there's like an interest in investment is everyone jumps on a plane and meets in a location, and everyone starts, trying to decide, are there similar cultures and things like that. So it was really from that early intro, the work that we had done together for months. And, we put a lot of energy into our culture of our business. DroneDeploy is the same. They put a lot of energy into their business. And we were, I think, lucky that two sets of values that the company had built up in the culture of the humans, that the type of humans we attract and what we encourage, was very much aligned. And I remember once the acquisition closed and we could tell the rest of our team, I sat the team in the room and said, by the way, this is Mike from DroneDeploy and the team. We've been acquired, and that, 80, 90% of these ventures fail. And it's up to us to make it work, because if your values are not the same, if the culture is not the same, if the co-founders start getting, brushing up against each other, you can have bad outcomes. And we're 3 years in and we're loving it. It's been a great ride. But a lot of it's down to the values of the team, on both sides. That's been the absolute critical factor. And DroneDeploy went on to acquire another company, Struction Site, a year later. Similar scenario, really strong values based, very similar cultures, and again, very, very successful integration. That was great.
No, and that's super interesting to see this come together smoothly. It's not to take for granted. For founders listening, it's really not to take for granted. It happens that it's not like this. And I'd love to understand, because you had seen DroneDeploy, right? You had worked with DroneDeploy, but then you found yourself in their, meetings, talking about strategy, talking about what will we do, what is our playbook for success. And I'd love for you to rip one page off that playbook and kind of unpack it here. What is the one page of the playbook that you didn't expect that DroneDeploy had, or something that you understood? Here's the key that has definitely, made them successful so far. Even when it comes to overarching thinking, it doesn't have to be specific GTM.
It came out. The CEO did a presentation at the first annual conference we could actually join in person, and he really kind of laid out his strategy for DroneDeploy. And in the reality capture space, obviously you have a huge number of very smart engineers that do geospatial stuff. You can process maps at very high resolution and high accuracy. You can do 3D reconstruction based on photos. Those are kind of table stakes. Very difficult, very high level of engineering, but kind of table stakes if you're a reality capture company. And DroneDeploy's competitors can do that kind of engineering as well. So the question is, for us, was what makes them unique? And the question, you're also going back to, well, why did we join DroneDeploy, and why did we decide, instead of going off on our path, go with them? And it really was the fact that, Mike spoke about these kind of three pillars for DroneDeploy. And the first one is unify. So it's bringing together aerial and ground. So historically, you really had reality capture from the air. It was a separate company from reality capture from the ground. And there were two different types of, so Struction Site, for example, was very indoor ground based. DroneDeploy historically was very aerial based, even though DroneDeploy was doing some ground work. And they were very much like, hey, it's actually quite hard geospatially to bring these two worlds together, but it's an important part that companies can now use one system. And we thought, that's a good strategy. That's great. The second component and the second pillar was really automation. It was saying, how can these companies just get the latest version, the latest digitized version of their construction site in the browser that they can collaborate on? And that relies automation. Things like dock drones that just happen to be flying on a daily basis. Things like ground robots that are running around with 360 cameras. And that was a critical pillar of success for DroneDeploy, to say, instead of having to create this army of pilots and this army of reality capture specialists and then, deprioritizing it because you ran out of time during the day, or those, it's like, hey, we need this on a continuous basis. And the third pillar was really AI. It was saying, two of the founders have PhDs in machine learning in these categories, and they, are creating incredibly powerful systems that not just show you a digital representation of your construction site. They can say, oh, and by the way, here's all your safety issues. based on today's scan.
Yeah.
And that kind of thing immediately means it's not just doing the running around with the camera job. It's actually doing the expert's job of literally looking and noting the issues that exist in all of these locations, and then creating a report for you to go and deal with. So we thought that strategy was, an exceptional strategy of the playbook and how the company's differentiating itself, becoming that really intelligent tool for digital reconstruction of these environments, plus the fact that you can rewind and go forward. In going back to, us on our own, the question for us, during the acquisition was option A, do we say, hey, we like you guys, we just want to partner with you, don't acquire us, we'll help you with the tech. And then, hey, could we be that $1 billion company on our own? That was option, A. Option B was we put the two companies together, and if we take DroneDeploy's already strength in very specific verticals like construction, and we add our automation technology on top of that, not only could we make our company worth more, but could we, if we're putting our shares together, make DroneDeploy significantly more valuable with the automation technology? And we believe that was the case. And then let's be honest, as founders, there's also the downside risk of, okay, what's the chance of us becoming $1 billion company? There's a lot of things that still have to become true. How many robotics companies are there going to be? How many enterprises are going to buy our thing? It's still in the really high risk category. Whereas launching onto DroneDeploy, which was around 7 or 8 years old at that stage, very mature, huge annual recurring revenue, one of the world's top board of directors out of Silicon Valley. It's just, they've done the hard yards, and they're already like fully on track. And so for us, it was like, yeah, we might be giving up some, potential crazy upside if you magically, did a Zuckerberg on the situation. But if you look at it realistically, you're going to create a very valuable company with the combined technology. There's a long way for DroneDeploy still to grow, especially with our technology and the stuff they have in their roadmap. And the downside, you're just eliminating a whole bunch of downside risk. And I don't know if you've ever played that game, Snakes and Ladders, where you kind of go across the board and you go up ladders. For us, it was like a massive jump up in a ladder, and we got to miss all the snakes along the way that weren't going to kill us. So
no, exactly.
So that was great.
Yeah, I mean that's an expected value type of situation that you have to gauge there, and you have to it must be a tough decision, but it's better if for example, in the terms of those acquisitions, there is you becoming one of their point people on robotics, and having the founders merge seamlessly into the company and give them the same purpose that they had before, with a better infrastructure to play with that purpose. That can also be I imagine another layer of that downside risk that goes away. The downside risk of being bored, or the downside risk of being purposeless, I mean, that goes away if you're also matched in terms of culture with the the company that's acquiring you. So I fully see that.
Yeah, and I think for us, it wasn't like they were a robotics infrastructure company buying a robotics infrastructure company and then telling us to do things their way. They were actually saying, what you're doing now is what we want, and we want you to keep going. So as you said, here's more resources, and oh, by the way, here's a whole bunch of customers on a platter. Go for it. Like, go fast, go hard. So for us, it was like, yes, this is brilliant. Let's get in there and actually go do this.
And this is brilliant because I think the commercial side of robotics, or the commercial side of so the acquisition of robotics, there are not that many. That's if we look at historically, there's an history of acquisition. There's a few acquirees and people, companies that have gone deep in their value chain and kept acquiring companies. But there's a lot of robotics business out there that will need to, if they want to survive, will need to become valuable businesses by themselves without leveraging a great platform of infrastructure players or other kind of like robotic solutions. And an interesting thing is that we are finding, when we talk to founders for investment, and we talk to founders for screening, and when founders reach out to us, we're finding that what truly defines a good robotics company is the type of development that they operate, is the type of development that they choose to implement in their company. So when we first met, again, taking back the sentence that you said, I think the first 10 minutes of this conversation, we spoke about the differences between the mechanical problem and the commercial problem in robotics, and how understanding this difference can make or break a company. That was our point. And what do you think is key today in 2024 for robotics founders to understand when they're approaching a real world problem with machines? So that's the problem, right? Real world problem, traditional industries, not necessarily, but most often, stuff that humans do that robots will do. And new founders, they're putting together a machine and software, and they're simply, they're going for a problem and trying to substitute. What is the key 2 or 3 things that they should keep in mind, and the North Stars they should follow?
Yeah, I mean, probably just state that there's a category of robotics that we work with, which is very specific. So, for example, we're not dealing with warehouse robots. That's a very mature space. We're dealing with what we call mobile robots, so things that move around outside the warehouse, typically wheels, legs, tracks, and generally they're operating in non-standardized environments. So standardized environments will be like agriculture. You can replant your entire apple crop so that you can pick the apples with a different form factor robot, and they're doing that right now. Whereas the environments we operate in, those environments were designed for humans, so oil refineries, mining sites, solar sites, these types of environments weren't designed for robots. You're trying to shove a robot into the environment, and the environment was not built and does not care about the robot. In fact, it's mostly trying to kill the poor robot with heat and dust and water and everything like that. So in that kind of environment, what we find is the mechanical side, we don't actually see as the biggest problem. The mechanical side, it's also a relationship between, usually these things are battery operated, and maybe the batteries are not that efficient. Maybe they only last an hour and a half, 2 hours. That's fine for this generation of robots. What's not fine is really the software side of the actual robot. So how does the robot navigate around an environment? Does it have to map the whole environment first? What if that environment changes? So take construction as an example. If you don't have good housekeeping, there's stuff all over the place that this robot has to navigate around. What are the health and safety implications of a robot hitting a ladder when somebody's standing on the ladder? The robots generally pre-map environments, and so they find their way around indoors based on looking around and seeing what they saw when the map was built. And construction environments are deliberately trying to change the environment. That's the whole job, is to build and change the environment to complete the project. So these poor robots are like, you put us in an environment that has boxes and people, and you're deliberately changing the map on us every single time we run. Like, what do you expect? So the software stack around navigation is very hard. The best in the world still struggle in construction sites at this stage. That's surmountable with a very expensive robot. So if you get a Boston Dynamics Spot robot, it does a good enough job, and you can create things in the environment that help it out every now and again. So you can put little QR codes up that it's like, now I know where I am again. Thank goodness. But there's a massive gap around the robot updating its map as it goes. They can't self-explore those environments. You definitely can't just give them a floor plan and say, go navigate this unknown environment just with a floor plan. That's unheard of magic, which everyone's thinking about and working on. But reliability in the software stack, reliability in terms of the robot not breaking, are still quite big problems, but the maturity of the software interface to actually wake the robot up, get to the location, not get lost on its way, make it home, is very, very low. There's maximum 5 companies in the world that can actually do a basic job of it, and it's still not a good job. Whereas nowadays, if you go buy a drone, you expect that thing to, as you said, chase you down through the trees on your mountain bike, and you expect it to dodge all the trees. You have a much higher expectation and reliability of that kind of system. The ground robots are not there yet, but everyone's working on the problems. It's totally solvable, but those are the issues. Not so much mechanical. We can deal with it breaking every now and again. Just the fact that it's software, the robot's navigation software, the robot's software to stand up and sit down and charge itself, is still not mature enough yet. It's hopefully 12 months away where it becomes much more reliable. And then you've got that price point where, hey, you can use a Boston Dynamics Spot and it does work, but how many of them can you deploy because of the price point in a very commercially sensitive price point area like construction.
And it's interesting because if we deep dive into construction, we just said this, the basic problem, right? So changing environment, robots are really good at lab environments. They're clear, well-defined. There's perimeters. There's an area that they can move into. What we have found is ground robots have a tendency to be more effective and to be it's easier to develop a ground robot that operates on a specific type of surfaces. For example, surfaces that are like bidimensional and uniform, right? So it's really easy for a robot to think through that task if, despite the environment changing, they have an easy surface to work on. And then the level 2, kind of like, and we'll call level n, whatever n-1 we're at now. The level n is try to make that 3D, try to make that add an extra dimension to the chaos of the robot, of the mapping. That already has the challenges it already has into mapping the 2D space. And I think what we saw a lot in the last wave of newly founded companies in space for construction robotics is that companies are hyper specializing on these type of 2D surfaces. Think roofs, rebars, companies that are drawing layouts in the ground, that are driving pylons in the ground, which is still a 2D problem because you just have to find where to drive the pylon in. So all of the 2D problems are becoming a real focus of strong founders. And then you have the complete opposite of the spectrum. It's weird because you don't really have the center, but you have the complete opposite of the spectrum with kind of like robots that are seeking generalized intelligence or generalized interaction with the real world. So humanoids, grippers of all sorts, and so that's the interesting case for us is to see how does that play out in the P&L of a construction company. When would a construction company come and say, "Hey, this is very interesting for us"? It definitely comes at a point of maximum reliability, maximum safety, as you mentioned. But it also clearly comes when the company has a clear P&L item for that specific task, and you're just taking away that P&L item. You're just pulling it out and substituting with the name of the company.
I think there is a history of this, though. If you look at machine control for outside machines that operate off GPS, diggers, they've operated quite comfortably in 3-dimensional environments, and they deliver value. They deliver accuracy. You need lower skilled workforce to get a much more accurate outcome. They provide safety, so you can create perimeters and block safety hazards like power lines and things like that. And the machines will, adapt to that kind of environment. They feed data back into your software, so you can see, digging profiles and incredible things. So I think what we want is some of those factors to be brought indoors. But indoors, one of the biggest damn problems is this GPS is just not available. So you have things like total station and surveying, and where you can actually get much more accurate internals, but it's highly specialized. And as you said, these robots, for us, it's not so much a 2D or a 3D problem. For us, it's the problem of the robots can build the map, but it's kind of like a human scribbling a maze map after they've just run through the maze. If you told them, give me down to the millimeter, the inch, how big this maze is, the person's guess would be wildly off. Whereas the surveyors need like really accurate data on that. So you can't just have a robot say it saw this at some point, but it's actually somewhere totally different. So that whole metrically, geospatially accurate indoor location is super hard in the robotics domain right now. And a lot of companies have been working on it. There's a company like Robotics. There's a whole bunch of groups out of the Australian research institutes that do these very accurate indoor things, but they're all very expensive. Even just to get a payload to teach your robot what that kind of accuracy is can cost $100,000. So until that price point comes down, we are definitely seeing construction companies scaling up with this expensive equipment, but only for the biggest projects. And as you said, where they've got P&Ls that can actually support that kind of infrastructure. And the value that those companies are getting are things like the insurers. The insurers say, if you can tell me you're going to be doing daily captures into your DroneDeploy reality capture system, we will give you a 5-10% discount on your insurance. And that can be millions and millions of dollars. So for them, it's like, oh, we're going to get a discount on our premium of millions of dollars on a $2 million data center, $2 billion data center. We can easily buy, 2 of these robots, this software, this reality capture, and run the thing on a daily basis and get a dock drone outside to scan it. Plus, it helps them with accuracy and track record and all of those other amazing things. So I think that's where, as you said, it's like, where can you fit this into your budget? But if you can prove that you're saving money by having the output the robots get, then it's a no-brainer. Or if you can say, hey, we use the latest equipment, so you're winning contracts because you're using the latest technology. That's where people are justifying these kinds of projects right now.
And funny that you mentioned data centers, because I think it's absolutely unrelated, right? But I think the growth of, the entire need for compute, that's what's going to drive a lot of the early pilots of really risky robotics bets in construction. And the reason I say this is that for the first time ever, the companies that are building the most valuable infrastructure out there, these giant refrigerators that are data centers, that's literally what they are. These giant refrigerators are being built by some of the cash richest companies in the world. And these are companies that don't care about, how much they have to spend. They care about lead time. They want to have the data center online. There's a really big margin on those projects, margin of error for them in the positive side of the costs. So
and they're believers in digitization. Totally. They're on board. They're like, we want accuracy. We want digitization. We want a full history of the project. We get that with this new technology. We're in. Let's go.
Yeah. And that goes for mapping for DroneDeploy, and it goes from, for aerial survey for DroneDeploy. And then when it comes to construction itself, if you can prove me that you can, lay my solar panel faster, or that you can, build my, brick wall faster with your robot, and you can tie my rebar faster, I really don't care about the risk, as long as you show me live that you can do it. While when is the GC that is building something for a traditional developer that has to take the decision, hey, should we integrate that technology into our stack or not for this project? Then you see risk taking. You see risk aversion, and you see these GCs that are operating on thinner margins on these projects to be like, but actually we've been building these for about 20, 25 years. We know how to do it. We'll employ people. We'll take a little bit more, but we'll do it. And I think these hyperscalers, Google, Meta, and Amazon, will be able to catalyze a lot of this construction robotics wave. That's what we're seeing, at least. The data center projects and the GCs that are building data centers are the first adopters of these technologies. And, that's been consistent in the last 6 months. And as of now, I think construction robotics is very immature space still. That's why we're doing a podcast about it and touching on the sides, because I think this is the way that we can slowly nudge people to build cool stuff for construction robotics. And if we can make a 1% difference in the number of founders that are even just looking at the idea maze to build something, I think it's just a success. But I have an interesting question to ask you, and interesting for me, might not be for you, but is what is next for you, right? So what motivates you to stay at DroneDeploy? And then what could change your mind? It's a tough question, but what could change your mind and be like, hey, actually, I should just go do this? And I would bake into that question, what startup would you found if you were given just a blank piece of paper again, and no risks, nothing, nothing.
I wouldn't start something if there was no risks. Because where's the fun in that? It just doesn't appeal to my nature.
That's absolutely a good point. It's a really good point.
With risk.
No constraint. No constraint. That's it.
Yeah, I think the difference is it's not like my co-founder Richard and I had taken Rokos, 10, 15 years in and created this big organization and, then handed it on to, the next round of team to take over. we kind of decided to merge forces with DroneDeploy quite early in our mission. And we still have that mission, is to really get a lot of robots into production. And so I think right now, we still only feel like we're just starting. With DroneDeploy's help, we're working with the biggest energy companies, the biggest GCs, the biggest, mining companies in the world. And we have that opportunity to take this robotics technology to that world-class level and actually win that, automation of reality capture space. So I think from that perspective, and the problems aren't solved. It's like still early in our industry. As you said, it's only those big projects. It's only those big GCs. It's only those specific types of projects, hospitals, data centers and those things that are really getting the benefits out of this technology. We think it can go much wider than that in time. So right now, still on our crusade that we started on, we've just, been able to specialize, in this automation on the reality capture side. There's a lot of things that fascinate me. I think the humanoid robotics side of things is really interesting. One question, for example, that we think about is we deal a lot with the dog format robots and the quadrupeds. And at what point is there more money put into the humanoid form factor than the quadrupeds? In other words, even though they're technically more complex, potentially they will come at a lower cost because of the scale of production. Potentially they'll be more capable because they come at mass scale. And so there's some interesting things that it's not like a humanoid form factor is necessarily better for us in the construction environment or these environments, but maybe the humanoid form factor eventually means that quadrupeds were just this like weird anomaly in the industry. It's like, remember when we had, robots that used to look like dogs? That was just like a weird phase. And everything immediately moves to humanoids. Like that's something that's fascinating. So I think tracking the humanoid robotics, I think if I was going to do something, I have no idea I think it's a very timely thing when you're looking to do a startup, you're really thinking about something very specific, and it's about that time in the industry. Right now, I think there will be interesting opportunities in humanoid robotics. It's no doubt going to take way longer than people think. It's going to be far more complex. They're going to be much dumber than people think in the early days. But then again, in the long term, they're probably going to be way smarter and way more capable and, at bigger scale than people could ever imagine. So being involved in that next wave of robotics, I think would be super cool.
Yeah. Yeah, no, you're right. And I think what's super cool about this is the world around us is humanoid shaped, is human shaped, right? It's basically everything that you see in your room has been thought of to be moved and operated by a human. And if you choose the same form factor and you can solve the mechanical problem of the form factor, then you find yourself with so many more tasks that you can do, right? If I tell you move this table from here to the next room, the most advanced, quadruped robots could not do that. Obviously, like maybe you can put a pylon that you can drive up. It can lift the the table. Yeah, I mean we can think of it, but it's gonna be hard. And this is what I think will enable these robots to come up. Also, together with massive funding that they're getting right now.
Yeah, totally. So and I think there's an interesting case as well. Like people always say, there's some very obvious things a quadruped is good at. So it's got 4 legs, so it's technically more stable. And people always talk about staircases and stability. It's an important thing. And we've rolled quadrupeds down many staircases. So we know that they're built for stability. There's certain circumstances you just don't do it. Health and safety means nobody can be downstream of a robot if they're going up the stairs. It just turns out a humanoid form factor could hold onto the handrail, which is what the health and safety policy is on an industrial site. So suddenly it's like, it doesn't matter if 2 legs are less stable because you've got a handrail. It makes it more stable, So those, as you say, like the world is built for humans and augmented massively for our form factor. So maybe it just turns out that that's better, but only, in the beginning, they're going to be 10 times more expensive than the most expensive quadrupeds, but maybe actually they'll come down much, much faster because of scale production.
Yeah, no, I mean, and I love this. I love to see you one day at, DroneDeploy, launching the new line of products, which is the integration and mapping of humanoid robots. I think that's going to be the culmination of this conversation. Like, yeah, actually, David did it. And so that would be really great. And David, I think we ran over what we thought was going to be a good time for the podcast, just because time flies when you have fun and when we talk about interesting things. So thank you a ton for the time that you put in this,
No problem.
for your availability.
Great to chat.
And yeah, likewise. And speak very soon.
Cool. Thanks.